This my day trading strategy has the capacity to pass any problem challenge within 1 week or in few days. Pay attention. You don't need a daily bias. You don't need fancy names. You don't need fancy strategy. Just understand the concept and you are good to go. So the first thing that we must do is we go to the 1 hour time frame. The 1 hour time frame becomes our macro structure, which is our defining range. So we are going to be trading the Kome defining range concept in line with probably with CROT and so on, right? Now, the most important thing here is for you to understand the various stamps. Okay, so as you can see, we have the inside bar. Why inside bars? Inside bars are points whereby the market makers buy and sell orders in a cheaper rate. All right, they sell expensively and they buy in a cheaper rate. Why? Because of low slippage. You know, in a market like this, in a move like this, you understand that there might be a slippage. So that's why they tend to take their trades within an inside bar. So we're going to leverage this. So the first thing we want to identify is an inside bar. So this is an inside bar. After the inside bar, we need to check the next candle. If the inside bar is bearish and the next candle is bearish, then that is KRC stamp. That's KRC stamp 2. Right? So we have it as stamp 2 and this is model 1. Why? Because the next candle, the confirmation candle, closed within this range. Okay, can we change this? Let's change this to something better. Yeah, I think it's better like this. Okay, let's go back to full screen. So now this template is actually a selling template. However, that's not it. We need to identify the high and the lows of the mother bar. So this is the mother bar high. So we're going to call it the MBH, and this is the mother bar low. We're going to call this MBL. Why are these important? These are reference points where we want to see price taken in order for us to expect price movement. So in a scenario like this, we are going to trade both sides of the market. However, though we are going to trade both sides of the market, we are not going to trade it blindly. We are going to trade it based on understanding. So the first thing that you want to do is anytime you see that the candle that closes after the inside bar that is bearish, the same candle is bearish, that is KDRC sell stamp 2. And what does that imply? It implies that once price takes the mother bar low, we are going to look for buys. Once it takes the high, we are going to look for sell. Now, if it takes the low first, good. If it takes the high first, good. However, there are different approach. But today, we are going to focus more on taking out the low first, as in this scenario, as in this example. So this was a trade which I actually took today, and this is why, as you can see, nothing is on the chart. I decided to choose a plain chart. I usually use for my forex.com. I decided to use Oanda so that we can have a plain chart while I explain everything to you in detail. Meanwhile, in case you have not liked or subscribed to the channel, you might want to do that. Okay, the next thing that we want to identify is time. So what exactly is the time? This is UTC time plus 1. So that's UK time plus 1. So we have this at 6 a.m. These are 7 a.m. So we are going to start trading from 7 a.m. GMT plus 1 time. Okay, for London, 7, 8, 9, 10. 7, 8, 9, 10. 11 and 12 are gap time. Those gap time are when the market makers, they go on breaks. Okay, I know most of you don't really know much about this. So enough said, let's use our replay tool, and I will explain everything to us in detail. So for example, if I come to the chart just the way I came to the chart, I came to the chart this morning by 7:45 also, because I'll have to prepare. I can prepare in less than 5 minutes, know exactly what to do because I understand this. In case you don't understand this on first watch, I recommend that you check it out again, watch it again, until you grasp and understand this perfectly. Okay, so what are we looking out for now? The next thing we want to look out for could be key levels. Now, key levels are not a great deal to me. They are not really that important for me. For in KDRC, key levels are not that important. But for those of you who trade ICT, this might actually be a boost for you. You can add this to your arsenal. Okay, so we have this as fair value gap. Price came in. We see that price kept pushing to the downside without closing the gap. So when price came to 7 a.m., you can start looking for entries. However, we will not just look for entries like that. We wait patiently. And what are we waiting for? We're actually waiting for price action to give us its hand. And one way to find out is time. So we're going to enter our setup by 8 a.m. UTC plus 1 time. So that's exactly what we're doing. So after we've identified our price action, macro structure, defining ranges on the higher time frame, the next thing that we want to do is we need to go to the lower time frame. The lower time frame is going to show us and tell us more story. Okay, so we'll go to the 5 minutes. So on the 5 minutes, what are we looking out for? We need to look for the dealing ranges. Higher time frame is our defining ranges, which is the main concept. Lower time frame is our dealing ranges, where and when we want to enter the market. All right. So the macro structure is the why. Why should I? Why? Where is price going to? Right? Why the daily ranges, which is on lower time frames, telling us when and where. Do you understand? Okay. So as you can see, we have this as more like a sweep of liquidity to the downside. Of course, like I said, liquidity, total soup, whatever it is not a great deal for the KDRC. However, whenever we find it, that's an additional confluence. So the next thing we want to do is, I guess we'll have to go back to this particular one. Yep, I think it's okay, right? So the next thing that I want to do right now is we need to check the time. So this is 7:55, and now we have two entry methods, which, okay, 3 to be precise. I'm going to show you all of those 3, so make sure you pay attention. All right, so we have this 7:55, and at 7:55 we already saw a sweep, right, of the previous candle. So this is actually an indicator that, okay, our bias, our direction is correct. And now, where is our drawn liquidity? Very important. Before we take the entry, I want to show you how you can identify your drawn liquidity. Okay, or your target, not just your drawn liquidity, also your target. So we're going to mark our fib. The fib is in standard deviations. Okay, so we'll mark that, and we're going to target, of course, for stamp 2. For stamp 2, this standard deviation 1% is actually the target. However, price can also come to 1 to 2. Now, what does this mean? This implies that when you enter your trade and price have gotten to 1%, right, you should be cautious. You should you should be able to, okay, say, okay, I want to get out of the market, or I don't want to take another entry again. All right, so now that we've identified our drawn liquidity, let's take out those lines. So this is what our standard deviation, right? So let's type that in. Okay, so that's 1% standard deviation, right? So this is 1% standard deviation, and this is 2% standard deviation. All right, 2% standard deviation. Okay, so basically these are very important. I'm telling you, these are very important. So now let's go back to our entries. So on our entry, what we want to do next is we want to identify bullish expansion candle. Okay, so if we play price, as you can see, this is the expansion candle. We can do two things. The first we can do is, we already have our confirmation, is to enter right away. We can enter right away, and our stop loss, we have to be below price, and our take profit, our target, we have to be somewhere here. So this is 1 to 2, and of course, if you also want to extend this, you can. Okay, but 1 to 1% standard deviation is okay. So this is 1 to 3 risk to reward ratio, which is cool, right? Not bad for a 6 pip stop loss. Okay, so this is one way you can enter. Okay, so let's play price and see exactly how it's going. All right, so as you can see, already in this trade. Now another way you could enter is, ask yourself the question, when price broke out, what did price do? Take note, this was the high that took out this low, which means there are buy stops that were here. So when price came, price took all these buy stops, so this becomes an important zone, and this is what ICT traders call the breaker block, right? I used to trade breaker blocks before, so I know exactly what it is. Okay, so another thing you can do, you can decide to enter from here. Okay, so this one is literally based on let's say, of course, let's say you miss the first entry. That's the only thing I could say, because even the one you enter directly, you already have your confirmation, so price shouldn't go back to your stop loss if you are accurate. Okay, so at this point, this is 8:40. We want to trade the next hour. The next hour is very important. The next hour becomes 9, right? 9. Okay, 8:55. So at this point, what are we looking out for? This candle took out this previous candle low, so we're waiting for a bullish expansion candle for confirmation, which we just found right now. Okay, so usually trades that are going to perform very well will give you your confirmation at least the first 15 minutes of the hour, right? So if you want to trade the 8 a.m. candle, your confirmation should come around 8 a.m. to 8:15. Do you understand? Exactly. So you could enter here, right? And of course, play price. Play price. Okay. Yep. That was a very nice move. Nice push. So as you can see, take profits have been hit nicely. Now, there are other things we also need to pay attention to. Once price gets to our drawn liquidity, we need to ask ourselves the question. We now go back to the template, to the foundation. What is the stamp that we're trading on? Is it a buy stamp or a sell stamp? If it's a sell stamp, then of course we should start looking for sales immediately our first drawn liquidity is reached. So how can we find that? We can find that on the 1 hour. So on the 1 hour, this is the 1 hour candle, the 9 a.m. candle, and usually after the 9 a.m. candle, we should expect a reversal. Usually our expectation is that price will come and meet the target. So this is actually the target. However, you don't have to allow price to get there first. You can decide to take your profits at the 50%. That's what I call the Kome range draw. Okay, 50% right there. So we have this as 50%. So what I can do is I can literally mark this low, right? Because this is where the actual order is. So I can mark that low and I will call it ARD. Okay, so are we going to trade the next hour? Of course we can if we want to. However, we can wait for further confirmation. And of course, taking this previous candle high is one of the greatest confirmation you can ever have. So don't worry, we'll go to the lower time frame and I will show you right now. I'll show you why we are taking that. Okay, so this is the lower time frame. This lower time frame, 5 minutes. Okay, so this is the candle, right? So this is 10:30. So at this point we can start looking for sales. And where is our entry? This is our entry at the close of this candle, right? And of course you might ask, if I took this trade. Yes, I took all of this trade. Check my free Telegram channel. You are going to see them right there. If I remember while editing this video, I will just paste some of them for you to see. Okay, so where are we targeting? We can target this low, right? So this literally 1 to 5 risk reward ratio. Now you understand why we are targeting this low, right? So another thing we can do is by 11 a.m. this is another hour. Now this hour we can choose to take our sales. However, we need to consider a few things. 11 and 12 a.m. are gap time, and already explained that to us. All right, they are gap time. So immediately this happened, there was no sweep before this candle. So at a point we can actually enter here. Of course, I entered here upon this confirmation right there. Okay, but my stop loss was at my first entry. That's exactly where my stop loss were, that first entry. And of course, you can target the same or even lower. Okay, sincerely, to be honest, our expectation is that price will come down to this zone and even beyond. All right, but you know, we are not in total control of the market. We can only control our strategy and our methods. Do you understand? So that's exactly what we're looking at right there. So immediately, okay, this is another confirmation to enter. Why is that? Because before, after 10:50 or after 10:45, we did not see any sweep. There was no sweep of liquidity. There was no sweep. So the only sweep we had was this particular one, and it was confirmed by a bearish candle. So automatically we can as well enter from here. Now, am I saying you should enter all of this trade at once? No, that's not what I'm saying. I'm saying in case you miss A, you can enter B. You miss B, you can enter C. And of course, there are times you are going to take losses, okay, because losses is part of our business, and until you accept that, there is no way you can become profitable. So, but imagine that you understand the dynamism of the market. This strategy is actually objective, okay? It's not something that is complicated. Just understand it, and you don't have to marry a particular bias. You don't have to, you understand. So let's play price and see exactly how it went. So basically, let's play price. Okay, so price pushed down nicely, and there you have it. So okay, this is remember that 1 hour low. So let's go to the 1 hour time frame. So 1 hour time frame, remember that low that we drew, which was this one, right? Exactly. So price came, tagged us in, created a lower low, and tends to retrace. So once you have an understanding of this, you can pass any problem challenge with ease. In case you really find value in this video, I will be more than happy if you can drop a like, can drop a comment, especially, right? I'll be excited if you can drop a comment. Let me know what you think about the video, what you think about the strategy, and how you can implement this, how you can add this to your concept, to your strategy, or to whatever you are trading, ICT, supply and demand zone, whatever, support and resistance, and so on. Meanwhile, we have a free Telegram channel. You want to check it out, check the video description.